Hello everybody and welcome to our Trader Chat number 3. I see there's an error in that title. It's Trader Chat number 3, our third Traders Chat. It's now the 31st of August, of course, and we're doing these Trader Chats every Wednesday. And they've been a fantastic forum for interaction of Sentient Trader users and for people who are interested in software and aren't yet using it to have a glimpse of what the software does and to interact with people who are busy using the software and working with it successfully. So without further ado, let's move on to the body of our webinar. I need to first of all present a disclaimer because it is very important that you understand that all trading involves risk. You should be aware of and accept this risk before trading and never trade with money you cannot afford to lose. You should also know that past performance of any trading methodology is no guarantee of future results. And I am not making any representation in this webinar that any account will achieve profits or losses similar to those discussed. You should also be aware that all results should be considered to be hypothetical unless otherwise specified, and that hypothetical performance results have many inherent limitations and, unlike an actual performance record, do not represent actual trading. It's important that you understand that before viewing the webinar. If you have any questions about the disclaimer or anything else, please pop them into the chat window or send us an email. Because this is only our third Traders Chat, let me just quickly go through the way in which one uses NetViewer. NetViewer is the system that we use to broadcast and hold our Trader Chat meetings. It's a very interactive platform, and you should know that the best way to ask questions is to type a message into the chat window. You are also able to speak. I can enable up to 6 people to speak at one time. You should only speak if, let's go back. You should only speak if you have a headset, otherwise you will have audio feedback. And if you want to speak, you should right-click to indicate this. And please also enter a chat message, because many people right-click accidentally. And it's a bit of a waste of time asking them if they want to be speaking or if it was a mistake. You should be aware there's a delay in the audio, which makes this less preferred than actually entering a message into the chat window. And you should also be aware that a left click of your mouse in the NetViewer window displays a pointer with your name attached to it. That's very useful if you're talking or asking a question, but it is distracting if you're not, so please try to avoid it where possible. We are still running our first timer offer. If you are a first-timer, in other words, this is the first Trader Chat that you've attended, then you can qualify for a first-timer special offer, 20% discount on the purchase price of Sentient Trader, which is valid for 24 hours. We found some people like to take a lot of time to evaluate things, which is how they choose to look at things. Some people see what they like and decide to purchase, in which case you can ask us for a first-timer a discount coupon. To do that, send a private chat message to Paul Johnson, and you select his name in the drop-down list in the chat window, and he'll send you a discount coupon and instructions. And finally, we have, of course, announced that we are recommencing our sentient trading workshops, which we started running last year. Sentient trading workshops are 3-day intensive workshops. We are also planning a series of online workshops. I don't know why the slideshow keeps moving forward. We are also planning some online workshops. So if you're interested in attending the 3-day intensive face-to-face workshops in either Europe, Australia, the USA, or anywhere else, then please go to our website and complete a short survey. And or you can simply send us an email, info@sentienttrader.com. If you're interested in online workshops, which would also be face-to-face, but less face-to-face than the real thing, then also please complete that survey. You can let us know what you think on that web page over there, resources, workshops. Okay, so let's get straight into our main chat. And let's see, I have a message from Clive, getting a lot of audio dropouts. Is everybody experiencing audio dropouts? Is there a general audio problem, or is it just with some people? Please let me know by typing a message into the chat window if you are all experiencing audio problems. Okay, we're getting quite a lot of messages in the chat windows that the audio is good. Some people having issues. We have found we shut down everything in our offices apart from vital systems that are using internet connectivity. If you have other pages that are open or you're receiving live streaming data, for instance, you might find that you have some audio problems. If it really becomes a problem, then I would suggest that you log out and try logging in again, because often a better connection is established when you log in again. I'm sorry about that. Unfortunately, there's not much I can do about it from my side. Right, so let's get down to the real thing, which is, of course, a discussion of the markets using Sentient Trader. And here we have an analysis of the S&P 500 in Sentient Trader. I spoke 2 weeks ago about this analysis. So let me just remind you about the details of it. Of course, today we're speaking about trading as opposed to the analysis. There are two things that Sentient Trader does, if you like. The first thing that it does is it analyzes a financial market. And the second thing that it does is it provides trading recommendations based on the analysis that it has performed. And those two tasks that the software performs, those two features of the software, can actually be viewed separately and talked about almost completely separately. So 2 weeks ago, I spoke about the analysis that we've been performing in S&P 500. I'll remind ourselves of the salient details. Let me zoom all the way out. And here you can see data going all the way back to 1994. This is the S&P 500, SPX. And you can see the first part of the chart is grayed out, which means the software is not actually analyzing that part of the software, that part of the data. Where you start your analysis is a very important aspect of creating an analysis that is good and that matches your own opinion about the market. And you can influence the analysis that the software performs simply by changing the starting date of your analysis. That's something we can talk about at more length when we discuss analyses in more detail. The salient point about this analysis is that in 2009, the software in March of 2009 has found an 18-month cycle trough. In other words, the 18-month cycle troughed in 2009. Let me show you the semicircles. These semicircles are another way of visualizing the cycles that are active in the market at the moment. You can see that the troughs are obviously the low points of the cycles, and you can see in March of 2009 we have a trough of the 18-month cycle, the yellow cycle, which is the longest cycle presented in this analysis. And if we look at this yellow semicircle, you can see that cycle was causing price to rise and then came down to another trough in July, or in fact the end of June 2010, where there was another trough of the 18-month cycle, and yet again that cycle caused prices to rise. And you can see that, of course, in the price, something was certainly causing the price to rise, most probably the 18-month cycle, and form a peak back in May of this year. And the 18-month cycle is now causing prices to fall, in other words, to drop. And according to this analysis, the 18-month cycle is going to cause prices to fall until this period over here, which is in fact the 29th of December 2011. The range of time in which that trough is expected is represented by this circle and whiskers. In other words, the circle and the lines here. So that range of time is really any time from sort of early September this year right up until May next year. So we're expecting a trough of the 18-month cycle, according to this analysis, towards the end of this year, early next year. In fact, we'll have a look at a longer-term analysis where I'll demonstrate that that's also likely to be the trough of a 4.5-year cycle. So, as you'll know, if you were in our Traders Chat 2 weeks ago, I am expecting the market to move down fairly strongly. Into a trough in 2012. Let's look in a little more detail at the analysis. The way that we do that is, having looked at the bigger picture, we simply zoom in on the chart. And so I do that simply by dragging my mouse like that. I can zoom in, and now we see the next cycle down, which is the 40-week cycle. You can see that according to this analysis, the software formed its last 40-week trough in March of this year, 17th of March 2011, represented by this pale green, lime green diamond over here. This is the position of the 40-week trough. And shortly after that time, I published an ST Outlook saying that I expected that that was, in fact, the 40-week trough, and that I expected that 40-week trough to be straddled, which means that that 40-week trough would be not very prominent relative to the size of it. It's a 40-week trough. 40 weeks is 9 months. You would expect that to be a really prominent trough. With retrospect, it wasn't that prominent. You tend to get a fairly symmetrical shape each side of a straddle trough. In this case, it wasn't very symmetrical. The price went up a little bit higher, but not very much in terms of a 9-month timescale. Okay, so let's have a look at what's happened since that 40-week trough. We keep zooming in. This is the way that you start looking at an analysis that Sentient Trader has performed. You go into smaller and smaller and finer detail. And you'll notice that since that 40-week trough in March of this year, at this point I'm going to turn off the semicircles. I find them a bit confusing when you look in too much detail. And you will see that the 20-week trough was expected to form a trough on this date over here, the 19th of July, but the range, as represented by the circle and whiskers, the circle is this little circle here, and the whiskers each side of it, to the left and to the right, represent the range. The circle is the exact date on which this trough was expected, but there's a range of time. And you can see that that range of time, this 20-week trough, was expected between the 19th of June of this year, and it should have occurred before the 9th of August of 2011. Now, you'll notice that that range has now expired, and yet the data has continued beyond it. Why has Sentient Trader not positioned that trough? It has not positioned that trough because it hasn't received enough evidence, real proof that that trough has occurred. However, the fact that that trough is very overdue will have quite a big impact on the trading, which we're going to start talking about in a moment, because what seems very likely is that this trough over here on the 9th of August was in fact a trough of the 20-week cycle. But Sentient Trader has not got enough evidence at this point to prove it, and so it hasn't positioned it yet. And then you will see it has positioned a trough of the 80-day cycle over here, and it is expecting the next 80-day cycle to be occurring around about now, anytime from the 17th of August, 2 weeks ago, up to the end of September, with the most likely date of that trough being the first week of September. So that's the analysis. Now let's talk about trading. And I want to go back to basics. Last week I spoke about the sentient trading methodology, which is based entirely upon Hurst's trading methodology, but with some additional filters and features, and using the power of Sentient Trader and the power of modern-day computers to use many statistics about the cycles and the shapes of the cycles to make better trades. But now let's go back to Hurst's original trading methodology, because sentient trading is based entirely upon Hurst's original trading methodology, by which I mean entry points and exit points are found on the basis of Hurst's original